Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So you have to forgive me if I had a little bit of like a cheesy title there. Figure it was a good way to kind of incorporate the holiday spirit into trading pattern, right? And admittedly, this actually isn't like a name I've really looked at the last couple months, and um, the only reason that I even pulled it up today was because there was a little bit of an intraday headline, and then the more I stared at it, the more interesting it kind of became to me. We traded this kind of on and off throughout the year. It had, you can see from like my markup, it had like a really nice uptrend, right? And it broke that uptrend. October sank below most of its moving averages, and then it's been kind of in like a tight or tighter, increasingly tight consolidation between the 100-day on the upside and the 200-day on the downside, right? And this like consistent, persistent bid in the market. I mean, it seems like it's like lifting everything that's been underperforming or things that maybe have been quiet. They start to wake up, starting to break out. We talked about like just what we're looking for during like this recent option coaching session on Monday. Just bullish reversals, bullish breakouts, bullish continuations, and like increasingly tight pennant, right? That has a very clean trigger at the 100-day, right? And it had a nice bounce off the 200, a kind of a quick base above the 20, and now today on that headline it's starting to push above the 100-day. It looks as of right now like it's going to close above it, right? And if it can close above it, a pent-up breakout really has plenty of space, and you're probably looking for a move up into like the 17 and a half, 18 area, because that's really like the only key reference point. And also like that would reset like that year-to-date uptrend, that really aggressive year-to-date uptrend it had been in prior to breaking down in October, right? So a great technical setup, very interesting. And you're like, how does this wrap into the options? Well, I don't know if you remember. I don't know if you saw those videos. I've done it. I've done two now in the last month. One was talking about Amazon, how options, the implied volatility, like the forward volatility over like the next month, 2 months, lower than the historic volatility. So like the tight trading range on Amazon has really kind of sucked a lot of the implied volatility out of the options, right? Then just more recently, I talked about EA, right? Kind of like the same idea that the tight trading range sucked a lot of the implied volatility out of the options on EA, which historically a volatile stock hasn't been volatile for months. And now, kind of the same idea with Snap. The 2, 3, 4 month consolidation has really dried up the option premium. It's like they're not cheap by any stretch, right? So just talking about here, like you can see, like the January options, they're not cheap, but at the same time, they are, I mean, depending which contracts you go with, nearly 14, 15 points, percentage points below their historical average, right? And if you go out even a little bit further to April, even going through like, because April will go through like the next earnings report. Okay, that's why I wanted to do that. Like the Januaries won't necessarily cover the earnings. April's will almost certainly cover the earnings. So you can see that even going out through like the next earnings report, you're still looking at options that are about 7 percentage points below the historical average in terms of level of volatility. And a lot of that has to do with the fact that the stock has been range bound. The average trading range has been tightening on the stock. It hasn't been nearly as volatile as it was for a long stretch this year. And also the overall level of volatility in the market, right? That impacts the pricing of options. So you kind of have like a twofold reason kind of like suppressing the prices on Snap. And then when you combine that with like a really nice technical setup, it leads to an interesting pattern, right? Where you get like a potential breakout technical move plus lower the normal option pricing, right? So um, again, kind of like a cheesy title, but I think it's like a really interesting setup. It kind of follows that EA. Amazon didn't really wake up, or it hasn't woken up yet. EA starting to move higher, right? You can see it's starting to work its way higher, and it hasn't had the big explosion to like the 4, 5, 6 point bar, but it's really starting to move, and now you're starting to see the volume come into the options. The implied volatility is creeping a little bit higher as the stock starts to move higher. So this kind of falls into that same category as me. I mean, I'm looking at a technical breakout with lower priced options or lower than average priced options, and I think it's worth keeping an eye on. All right. Things are kind of slowing down a little bit from like a scheduled news perspective as we get into the end of the year here. Still have a couple earnings after the close tonight that are interesting. Still have a couple biotech events that may be interesting by the end of the year. But really, like the focus now and a lot of the trade focus for me is shifting to the beginning of January. So I'm thinking about 2 steps ahead, like what's coming at the beginning of January, what's coming mid-January. So it's retail, it's the JP Morgan conference, and it's earnings. And like really, that's just kind of my focus for right now. And that'll probably be my focus like through like the next 2 weeks, through like the kind of like the holiday shortened trading sessions. All right. So if you like these videos and you're looking for more information on options trading, options education, or maybe more trade ideas, please follow up with the link in the description of the video for more information on options and play. So I hope you all had a wonderful night, and I will talk to you all tomorrow.